Investors and traders, welcome to the channel Market Chart Pattern. Today is 21st of June 2025. Hope everyone is having a fantastic weekend. It's really amazing that half of the year has already gone by, and so 2025 is just flying in really quickly. And what a year it has been. We have seen things that we have actually not seen before with tariffs, geopolitical uncertainty. So what we're going to do is we are going to take a look at the charts, and we will see what the charts are telling us, what the patterns are telling us, what is going on in the markets. This is going to be the video number one of our two-part video. So we'll just take a look at the debt markets in the US dollar, Bitcoin, gold, mainly in this video, and then I will do another video tomorrow, Sunday, in which we'll cover the stock indices, the world stock indices, the US stock indices in depth, and also we'll try to take a look at the sectors as well. So this way I'm able to actually split the time and able to do more videos. Otherwise the videos, they just get too long time wise. So thank you very much for sticking with me. As always, this video is for educational purposes only, and it is not a financial advice. We are taking a look at the US 2-year Treasury note. Now, one of the things is last week was really important because we had the FOMC meeting in which the Federal Reserve, they just kept the interest rates unchanged, which is kind of expected for this meeting. However, what the markets are telling us, based on the patterns, that actually the interest rates are likely to move lower. So there is a chance that what the Fed actually was saying, which was implied in terms of the way the Chairman Powell answered the questions and is also in his commentary. Fed is of the view that the tariffs are inflationary and we could see a higher inflation print. However, the question becomes that if on the economic front, because they have dual mandate, and one of the mandate is to actually also have, in addition to price stability, the unemployment or the employment rate needs to be stable. So if the unemployment rates begins to go higher, then I would personally think that the Fed might actually begin to lower the interest rates, even if the inflation print is higher than 2%. So maybe 2.5% to 3% range, they might actually start doing that. So this is just my opinion, but the patterns are telling us that this is the resistance zone. And in my opinion, 2-year Treasury note, I've done videos about this before as well. The Fed fund, or it does appear that the Federal Reserve follow the 2-year Treasury note very closely. And as we can see that the yields have been going down for quite a long time, and in 2025, since May, we have seen a sort of a surge in the yields, but it is respecting this resistance zone. And if it's able to, you can see a bit of this dynamite triangle pattern right here. If it is able to actually close this bottom trend line to the downside, it could be pretty explosive move, most likely to the downside. And we have these patterns completing anywhere between 3.2 to 3% yield. So this is where the Fed fund rates will eventually follow. And if the Fed actually begins its interest rate cycle, where they will be cutting interest rates, they could actually start with a 50 basis points cut, which will actually cover up, let's say, 2 meetings in which they do 25 basis points with a 50 basis points higher than expected. They could start like that. So the interesting thing is, even if the Fed did not cut rates, we have seen last Friday the yields actually closing lower, close to about 1%, so minus 1.84 percentage points. And now if we take a look at this on the 30-year long bond future, the long bond yield, which is the 30-year bond, we can see that it's a really nice pattern formation right here. We have a confluence of 1.618 and 1.272 expansions coming here. In addition, we have this ABCD in blue, and we have seen the yield actually move lower, but it's kind of stuck in a trading range. And I will personally think that the chances are it might actually resolve to the downside, but on the long end of the curve, things are a little bit different to the shorter end. So the shorter end, actually, this is where the Fed is actually a lot more influential. We could see the yield move down quite quickly, but the long end, because of the duration, there's more risk. That is a little bit of a different story, and it could also mean that the yield curve is actually steepening. So it's more likely to remain range bound in this kind of vicinity between where it is now and 5%. And then if we take a look at the 10-year, here we go. And on the 10-year, what we can see is this is also range bound, but it's still below our resistance level, and it's just going nowhere. We are seeing the market just grind itself out. You know, up and down is this trading range. But just like the 2-year, it could actually break out of this dynamite triangle. It could be pretty explosive move, and most likely to the downside. So this is what we are looking at in the 10-year. Now let's take a look at the dollar index. This is the daily chart of the dollar index, and here the dollar actually rallied for a few days, pretty much coinciding with when the geopolitical events in the Middle East happened on Friday morning, Friday night, Thursday night. This is when, well, I mean the Friday the 13th of June. That's when Israel actually attacked Iran, and you can read about this on Google. But this was also where we had the 1.272 expansion coming around here, and we have seen the market rally right to the 38.2% retracement of this move right here. And you know, this is what I wrote here, that in the news it was okay, there is dollar has been bought as safe haven buying, whatever you may call it, but we actually had this 1.272 expansion right here, and this expansion is basically of this entire move from this bottom to this high right here, which we had actually also nailed. Long-time subscribers will know that, because we had this ABCD pattern, and then we also had a 3 drives to a top pattern within the CD leg, and we haven't seen higher highs than after that. So the opinion is, if we take a look at this on the longer term chart, the dollar is actually pretty weak because it closed below the 98 level. So from this level, because of the 1.272 expansion, we could see here some rally attempts, but the chances are we are in this CD leg, and we could see the dollar move to about 94.5. Now on the flip side, if we take a look at the some of the fiat currencies, with the EURUSD being the most notable, which is about 51% of dollar index, well, we can see it's got a chance to hit the 1.175. This is the weekly pattern, but it's just going nowhere. Last week is just you know, really unchanged for the week. There was in the beginning of the week some weakness, then last Friday some buying came in, but the chances are it is likely to hit this level. But you can see what is happening is just you know, it's just consolidating around here. Now GBP USD, it has actually been pretty strong, but it's right at this ABCD here, and then of course 1.272 expansion. So we have a confluence of a number of things here. So now it's actually more chance for this one to have a pullback in comparison to the euro. So I think the euro currency is actually stronger if you are looking at the cross pair euro GBP by the looks of it. So I think it's got a chance to pull back from here because of the ABCD, and of course the 1.272 expansion, and potentially this double top, but I'm not taking into consideration. It had a chance to rally to 1.38. Now not too sure whether it will be able to do that if we get a stronger pullback, but you know, it's got a chance for a retracement now, especially the way it closed last week. Okay, so now let's take a look at Bitcoin. So I was taking a look at the Coinbase, the exchange, and that has done fantastically well last week. But the Bitcoin itself, which is of course one of the major cryptocurrencies being traded on the exchange, hasn't done that well. It's just gone sideways, not doing too much. Still got a chance to 120,500 in my opinion. And then if we go back to the daily chart where we were following it more closely, uh, it's kind of respecting this trend line, yes and no. Um, and we had a higher target of this, which it could still reach. But if it begins to close below this, then I think we are in ABCD. Anyway, it's just sideways price action. And I think the Bitcoin is actually quite strong overall. But because the recent strength which has come into the dollar, that might be impacting this currency a little bit. So I think we might be in an ABCD correction. We could see Bitcoin move a little bit lower, and if we were to draw the ABCD, this is what it's going to look like. So in the vicinity of 100,000, maybe a little bit lower, that remains a possibility. Of course, we should also draw the retracement and see where the 38.2% is. A deeper retracement to about 97,600 perhaps. Thereabouts, I think, where the Bitcoin can go. Now, let's take a look at the gold market. Here we go. So the gold, quite surprisingly, has actually been trading lower past week. So you can see that on Monday it had a big, huge rally when the markets opened after the geopolitical events, but it's just been sold off. It's resting at around the 20-day moving average. But as long as this pattern, which is our pattern right here, is held, it's still got a chance to move higher. But it's also on the longer term charts. It is in the region where, you know, on the monthly chart, you can see that where we have these targets. Some of our targets have already been met, but it's still got a chance to 3,650 to 3,800. It's still got a chance to hit that. But this market is kind of coiling right here. One of the things I would like to mention is whenever we have actually some sort of a crisis starting, gold actually pulls back. And of course, there are some exceptions. Like to 2011, there was just a start of a bear market. But right here, where we are in March of 2008, this is when it actually pulled back and was a pullback. And the reason I think is because it's just liquidation. It's just liquidation. Sometimes it's also margin calls. Sometimes it's just the liquidation of the assets. Geopolitical heightened conditions might just let the investors sell out. Some of the gains they have realized, it's been a really dramatic move in gold since 2024. Taking some profits, being out of the market in some case, is the kind of situation that can take place. So still we have higher targets, but it does look like on the monthly charts it's just not as strong what we had seen before. It is just moving sideways, consolidating a little bit around here. But again, very strong, bullish looking chart, what the gold is doing. And silver, on the other hand, actually it also became stronger. It has become stronger, but it's just nowhere near where the gold is. And then if we take a look at this on the longer term monthly charts, here we go. This is what we were looking at. $50 gold, $50 silver. Of course, this is the COMEX futures chart. COMEX silver. It did that in 2011, and it hasn't been able to do that. But the gold has, made new all-time highs. So I think it's still got a chance to rally. Maybe try to go for $50. That possibility is still there. But it is weaker than the gold itself. So this is what we are watching in the key markets. I do apologize for some of the background noise based on where I am at the moment. But I think you're gonna find the audio good enough. I do apologize if the audio was not that good. This is why I would like you to actually also subscribe to the Substack if you want to, because I'm able to post a lot more charts over there, and I've already posted some charts. You can go and have a look at the market chart pattern.substack.com. It is free. There's just no charges, no cost for it, and I'm sharing more charts and information over there. Find it a little bit easier to basically put it in an email format, which you can actually open on your devices later on. If you are, on a train or on a bus, for example, you can actually follow the material. So thank you very much for watching the video, and if you found the video of educational value, give it a thumbs up. And if you like how we do the technical analysis here, please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will not miss any videos. Thank you very much. Good luck, good trading, and speak to you guys soon.